The way that cars are taxed on first registration from the 1st of April is changing, moving away from emissions-based to a different basis. The government have been losing revenue if more and more cars have been CO2 efficient, and they're rebalancing it to give themselves the tax revenues. The current regime for road tax is based solely on CO2 emissions. The government have been trying to promote the environmentally friendliness of cars by reducing road tax on highly efficient cars. And in fact, a lot of cars these days are on the road with zero road tax, as long as they're below a certain threshold of CO2 emissions. From the 1st of April, the new regime changes things. For ultra low emissions of CO2 vehicles, it remains the same, zero in the first year, zero thereafter. So a real incentive to go for ultra low emissions. For the bulk of vehicles, the first year is related to emissions. So the higher the emissions the car emits, the higher the tax. On average, taxes are going up. And then in subsequent years, it's a pretty standard rate irrespective of emissions thereafter. There is a further twist, which is for vehicles with a list price over £40,000. In the first 5 years of ownership for cars registered after the 1st of April, there is an additional taxation level for each year for the first 5 years. So it's actually a reasonably complicated system, and that's where consumers need to be very careful. There are a number of vehicles where this new regime doesn't apply. For example, commercial vehicles, heavy goods vehicles and motorbikes. The regime has really been put in place to incentivise people to go for the ultra-low emission vehicles, electric vehicles, rather than internal combustion engine, as the government tries to move us to a low carbon economy. There are a lot of people worried in the United Kingdom that this taxation change is going to affect their current vehicle. It absolutely does not. This applies to vehicles registered from the 1st of April 2017. So if you're driving a vehicle at the moment, your taxation is exactly the same as it currently is. There is no retrospective element to this taxation change. If you're currently looking to buy a car in the next 6 months, the advice is to assess how these changes affect your cost of motoring in the next 5 years. There are two ways of doing that. We have an online calculator on our website which allows you to look at the costs before and after the 1st of April to see how it would rise if you deferred your purchase to after the 1st of April. And the other piece of advice I've got is people in our dealerships understand these changes, they've got the calculator, they can work with you, because there could be very well a possibility that the cost of motoring is reduced if you buy the car and register a new car before the 1st of April, i.e. by the end of March, as opposed to waiting. In the vast majority of cars, if you defer after the 1st of April, your cost of motoring is going to go up.